Ladies and gentlemen, welcome back to the channel. Nvidia is recovering up 6.5% today, and apparently retail investors went out and bought the dip yesterday in Nvidia in record numbers. Let me know if you were one of those retail investors that went out and bought the dip. Now, here in this video, I will share with you some of the biggest news taking place in our markets today. We did get economic data this morning. We will get more economic data tomorrow. And importantly, Fed Jerome Powell. And towards the end of this video, I will share my expectations for what the Fed could do to our markets. Because believe it or not, this is going to sound crazy to you. Wall Street is actually assigning a 25% probability that the Fed raises rates this year. And I think that could fall to 0 coming tomorrow. And that would be a big upside catalyst for stocks. So ladies and gentlemen, let's get into all of this information. Hit the like button as well as subscribe to the channel if you have not done so already. If you like to make money and you want to stay up to date on what's going on in our markets each and every single day. Nvidia news today is actually pretty good. Tigris Financial Partners upgrades Nvidia to a strong buy from buy with a price target of $220 per share, likely helping to fuel some of that recovery. And it will be especially important to see how earnings turn out on Wednesday and Thursday. So Wednesday pre-market, tomorrow pre-market, you have ASML. That's the company that services Taiwan Semiconductor's equipment. It's the company that sells them the semiconductor equipment. Progressive, T-Mobile, ADP, Teva, General Dynamics, NASDAQ, VF Corporation. But Wednesday and after hours, you have Tesla, Meta, Microsoft, IBM, Lam Research, ServiceNow, Celestica, Wolfspeed, and Western Digital. Obviously, these 5 companies here, Tesla, Meta, Microsoft, IBM, and Lam Research, these are the important ones for Nvidia. To a lesser extent, IBM, but they do have their own uses for Nvidia products. Really, Microsoft, Meta, and Tesla. Do they keep their CapEx guidance the same? Do they raise that? Do they have good, bad things to say about DeepSeek? That's the question. The reason Nvidia sold off so much, and the reason, certain areas of our markets have not done well in the last couple of days, is because of the fear that CapEx budgets could be lowered. So if that does not happen tomorrow, you're likely going to see a pretty damn risk-on market, assuming we have good earnings from these names as well. Now, Thursday, you will get UPS, MasterCard, Dow, Blackstone Group, Nokia, Southwest, Allergo, Caterpillar, Comcast, and Mobileye in pre-market. And after hours, you have Apple, Intel, Visa, KLA, CN, Atlassian, Baker Hughes, Decker Brands, United States Steel, and SkyWest. And then Friday pre-market, ExxonMobil, Chevron, AbbVie, Colgate, Phillips 66, and Charter. Now, durable goods orders this morning came in really weak, coming in at negative 2.2%. Last month was revised from negative 1.1% to negative 2%. So last month was worse than expected, or really November. And then December was even well worse than expected. Okay, so bad economic data. It didn't really affect the markets today. I guess there's other things going on that are affecting Treasury yields as well. But if you take a look at bond yields today, bond yields are actually climbing almost 4 basis points, which I think is just some, recovery, if you will, from yesterday's, bond yields coming down 10 basis points. Bond yields came down 10 basis points yesterday as investors were fearful and seeking a flight to safety following Nvidia, their record sell-off. And now it's probably just, retracing a little bit of the loss from yesterday. Now, if we take a look at the other sets of economic data today, S&P Case-Shiller home price year over year came in mainly in line with expectations. CB consumer confidence was expected at about 104. It came in at 104.1. Last month was revised up from 104.7 to 109.5. So that is a sharp drop from December heading into January, but still, that's pretty good for overall consumer confidence. Richmond Fed Manufacturing Index came in better than expected at -4 versus expectations of -8, and last month was at -10. Now, your 7-year bond auction today came in pretty good as well. CNN's Fear and Greed Index is still holding on to fear at 44, but almost in neutral. So yeah, we're still trying to get into a neutral place. And that just makes me a little bit more bullish, right? If markets are still in fear on the CNN Fear and Greed Index, that's normally a good time to buy, right? That's normally not when you want to be going all in on puts and playing super defensive. Now, market momentum is fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options, greed. Market volatility is neutral. And safe haven demand is fear. And junk bond demand in greed. The percent of stocks trading above the 50-day moving average is actually declining today. You have 1.3% of all stocks falling below their 50-day moving average, coming in at about 47% of stocks trading above their 50-day moving average. So you only have 47% of stocks above their 50-day moving average. Like, this is a very still weak market. There's not a lot of positive breath right now. And I think after the Fed tomorrow, I think after earnings tomorrow, we could be taking a big, breath of fresh air, of potentially bullish air, if I were to say so myself, as long as we don't get any really bad news from the Fed or CapEx budgets get slashed or anything super dramatic. I think we're priced, way too negatively. Okay, I don't think markets are nearly as optimistic as they probably should be. In fact, there's still a 25% chance, according to Fed funds futures contracts, that we could see an interest rate hike this year. I don't think the Fed has any plans in giving us an interest rate hike this year. And I do think if the Fed is more dovish than expected, which is my belief, if the Fed shows that they're not as worried about tariffs causing inflation, that they do plan to cut a couple of times this year, then that's probably a good thing for small caps. It's probably a good thing for cyclicals. That's probably a good thing for general risk on markets. And if we take a look at the Fed funds rate monitor tool, over here on investing.com, we can see that the markets are not pricing in the next Fed rate cut until June 18th, 2025. And I think after tomorrow, we may actually price that in potentially in May or March if the Fed is, as dovish as I think they will be. The Fed really took this hardline approach in the last Fed meeting. And I don't think Powell wanted to be as hawkish as he sounded. So I think they have a lot of work to do in walking that back a bit. Even Trump said that he basically is demanding the Fed cut rates. Now, is Powell going to just fold and listen to that and start cutting rates? No. But I think he will try to open the door for that to happen down the line. I think Powell's job tomorrow is to open the door for a March 19th cut. As long as inflation doesn't spike, then I think that's the objective here from the Fed heading into tomorrow. Now, currently for March 19th, which I think is really the important Fed funds contract to watch. Technically, May is not pricing in a cut either, but there's a 49.5% chance of a pause through May 7th, and there's a 41.3% chance of a cut. So it's pretty close. There's only about an 8% difference. I think almost certainly the markets are going to at least price in a cut by May. But it's by March that would be the big swing, okay? There's a 70.4% chance of a continued pause, March 19th, 2025, and only a 29% chance of a cut. If we were to see a cut get priced in, that could be very bullish for markets, especially again, if the Fed takes the stance of we don't see inflation as a major issue at this point, which is kind of the opposite of what the Fed delivered on the last conference. And again, I don't think Powell meant to be as hawkish as he came off, but he was hawkish. So with that said, I do think Powell is going to be a very positive catalyst for stocks tomorrow. I think Wall Street pricing in a 25% chance of a Fed hike this year is absolutely ridiculous. And I think just those probabilities falling alone will likely cause markets to rise a lot. And again, to be honest, I don't think Powell meant to be as hawkish as he was on the last conference. Okay. And I think Powell is going to be more dovish than expected tomorrow. I don't think Powell's going to sound super concerned about Trump's tariffs and inflation. I just don't think that's what we're in store for. Now, worth mentioning, a couple of days ago, it came out that rents have actually fallen on a year-over-year basis. That has not happened since Q2 of 2010, 15 years ago. Okay, that is very positive for inflation. You've also seen oil come down as well in recent days. That is positive for inflation. And today we did get durable goods orders that came in a big downside surprise number. And well, that's positive on bringing down inflation. Now, again, we don't have much for economic data tomorrow morning. You do have mortgage rates, the goods trades balance, advanced data for December, expecting negative 105.7 billion. Wholesale inventories month over month, expecting positive 0.1%. The big story is Jerome Powell at 2 p.m. The report comes out, and then at 2:30 p.m. the Fed conference comes out, and that's the big catalyst for markets. Now, on Thursday, we will get initial jobless claims, GDP growth rate, quarter over quarter, advanced data for Q4, expecting GDP to come down to about 2.8% from 3.1% last quarter. And initial jobless claims are expected to actually fall to 220,000 from 223,000 last week. You get the Fed's balance sheet and a couple other smaller data points. And then on Friday, we will be getting core PCE month over month, expecting 0.2%, personal income month over month, expecting positive 0.4%, and personal spending month over month expected at positive 0.5%. Now, here on the day today, the Dow is up 1/3%, S&P 500 is up 0.77%, NASDAQ up 1.67%. The Russell is actually slightly red today, marginally down 0.02%, and the VIX is down about 7.5%. Oil is down about 0.2%, and bond yields are actually up 2.5 basis points today. Now, we did have a really good 7-year bond auction. It looks like a lot of banks actually went out and bidded in that auction directly, which is not something you normally see. About 8% of the buys today were direct bids from big banks. So that's actually very, very positive. So it did bring down 10-year Treasury yields from the high of the day today, but I expect coming tomorrow with the Fed, you could see a big drop in 10-year Treasury yields, which will especially be good for small caps and some of the areas that have not done well in recent weeks. So let me know what you think about all of this information down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.